Okay, folks, good afternoon. Okay, we're going to take a look at the Canadian dollar. All right, so we have on the daily chart on the left-hand side, you can see that price has pulled back into a rather deep retracement. And I'm using this body here. Now, obviously, I could have done this, okay, and used the Sunday candle. If you wanted to do that, there'd be certainly nothing wrong with that. You'd still get down into optimal trade entry. But I'm using this right here, the open on this candle here, because I want to stick to weekdays, not Sunday candles. So I'm really ignoring this candle here, and this candle actually comes in on the 22nd. Okay, so we're going to ignore that of October, and we're going to go with the 23rd, okay, which is a Monday. And just guys see it back 1 month. Here's the Sunday, and we're using the 23rd, which is a Monday. And again, that's this candle right here, right there, 23rd. So that's the Monday, October 23rd of 2017. And you'll notice on this day, okay, disregard this candle for a moment, okay? This is, imagine that it's not there, okay? For platforms that don't have Sunday candles, what you would be left with is a large candle here on the previous Friday, and then Monday's candle here, and then Tuesday, okay? So in the event that we don't have Sunday candles, because I try to disregard them in my own presentations using this platform, this up candle, and then Monday's trading, then Tuesday's higher low, okay? This, to me, is a continued swing low, okay? So for your notes, it's called a continued swing low. That means if we have a big run up, we have a candle immediately after the big up candle, then we have another candle that's a higher low, okay? It's a continued swing low. Okay, so in other words, you're not requiring the retracement. If you see this happening here, now let me preface it by saying that it's only a continued swing low if the market is bullish. Now, obviously, if you see this environment here, big up candle, and this short little swing low type pattern I'm explaining, this could many times, if it's not bullish, this could be the top in the marketplace and then it starts to come down. So it's not just candlestick patterns and it's not swing highs and swing lows that fixes the problem with profitability or consistency. You still have to have a context understood about where price is most likely going to go. So I'm going to forego that discussion for the tutorials, but for right now, this formation right here, after a big large up candle, one candle, and then a higher low candle, this is a continued swing low, okay? So when we have that, we can use that as an anchor point, okay? And again, disregarding the Sunday's candle, and you run that out. Now, for folks that just simply can't agree with what I'm presenting here today, and you're going to arm wrestle me, or at least try to arm wrestle me, saying, "Oh well, this is all hindsight, this, that, and other thing." Long and short of it is, check it, test it, and you'll see it's many times it's in the charts a lot. Okay, so even if I were just to use this candle here, or use the Sunday's candle because it is a swing low in that case, it still gets you to optimal trade entry. So these candles in here, yesterday, Monday's trading, and then today's trading, they are reacting off of that optimal trade entry. So no matter how you slice it, it is what it is. Okay, so but I'm telling you how I did it and how I framed it. So this is what I did. So now we know on the daily chart we are in an area where we could potentially see a support level form based on the optimal trade entry 70.5 level. Okay, it comes in this daily chart for this platform and this data is 127.11. Okay, so now we're going to go over to the 15-minute time frame and set up our scalps. And I'm going to drop a horizontal line here, and I'll put that right on the 11 level. Okay, and I'm going to add midnight New York time right there. So you can see how price has rallied away, came back down, dropped into it, and then price immediately after New York midnight time started running aggressively. When prices start off right after midnight like this, okay, many of you understand my Power 3 concept where Power 3 stands for accumulation, distribution, and manipulation. Okay, that's what Power 3 is. So what would be understood in terms of Power 3 would be the open and accumulation. Okay, so that's one of three. Okay, the manipulation, the drop down here. Okay, and the rally up, and the distribution here, creating the high of the day. And I'll tell you why that was probable in a couple minutes. But Power 3 is accumulation, distribution, and manipulation. Those three components make up the overall price action from an institutional mindset and from a smart money perspective. So we have the previous day's high, which is seen here. Okay, so I'm going to take this and drop it right there. Okay, and I'm just going to change it a little bit just so we can distinguish it from the other. Okay, so now we have previous day's high right here. Price gives a immediate runaway. Now, the reason why daily intraday price action does this right after New York midnight is because it's reacting off of a daily higher time frame or weekly time frame. Okay, that's what causes these one-way shots right after midnight in New York time. Many times you'll see, as my tutorials teach, that it'll open and it's bullish and drop down into around 2 o'clock, 3 o'clock in the morning New York time, create the low of the day, and then rally up and do the same thing here. In this particular day, it doesn't do that, and the reason why is because it's moving off of a higher time frame daily level. Okay, so put that in your notes as well. So price starts to trade higher and does in fact run previous day's high right here. Now, when we look for intraday levels, we look for 10 to 20 pip price swings, as my tutorials teach. And I'm just going to quickly put that lipstick on the chart. Okay, and we're going to put our line right here, and we're going to draw a rectangle up. 20 pips is right there. Okay, so there's 20 pips above the previous day's high, and that takes us to about right there. Okay, so 128.04. So 128.04 is above the big figure of 128.00. Okay, so if we're expecting, as I was expecting, higher prices on UsdCad, the reason why I was expecting higher UsdCad prices is if I go back over to the daily chart on the dollar index, the dollar index hasn't really shown a willingness to break down yet. Okay, it's actually inside of a pattern that looks to me, at least for the short term, that would be neutral to bullish. I don't see it wanting to go lower. It's being held in a rather tight dealing range. Now, it doesn't mean that it can't break down from here. It just meant as I went into today's trading, I didn't feel that it was going to break down. I felt because the dollar was being held in consolidation, that would, at least for me, bolster with weakness on Canadian dollar, allow the dollar CAD pair to rally because the dollar is the first in the pair's name and then Canadian dollar. So when this currency is rallying, that means Canadian is weaker compared to the dollar. And since dollar is being held in consolidation, weakness in Canadian dollar will propel this particular Forex pair higher. Now I'm going to take you into the actual nuts and bolts of today's discussion. Okay, and here is the action based on what I saw. And this is average daily range. Okay, now notice average daily range is actually the same thing as previous day's high as well. Okay, within an earshot of it. We're going to look at this price action right in here. We're going to have to zoom in a little bit, but for right now, I want you to remember the context I gave you for optimal trade entry. They form at institutional price levels. They are called by many circles as psychological levels. There's nothing psychological about these things, okay? Institutions use round numbers for their orders because it makes it easy to put in large blocks of orders. That's it, okay? That's the real reason what causes the market to trade around zero levels, okay? And that's what it is. It's 20s, 80s, because they go beyond the big figure 0 levels, above or below it, depending upon if you're bearish or bullish, and I'll explain that in a minute. And the mid figure, okay, like 127.50, that's a mid figure level, okay. Then we have 127.80, which is the next institutional price level. Then I was looking at 127.97 because it's 3 pips just before the 128 big figure. Okay, so that's the reason why I wanted that price level. And secondly, we know that 128 is the big figure, and then right above that we'll have 10 pips, which is 128.10, and then 128.20. Okay, and whenever we have a big figure, my tutorials teach, as you'll see, that it goes 10 to 20 pips above intraday highs, and a 20 pip sweep takes us exactly up to 128.20. That's all I'm showing you here with this triangle here, just highlighting the fact that it's a sweep above the 128 big figure. So please don't read too much into the geometry on this chart. It's not there to draw any more attention that's necessary. But I want you to take a look at the kill zone, the ICT kill zone, okay? And you can see I have the body on this swing low. The open on this candle is the lowest of the body reference points, open or close. You have the low, higher low to the left and right of it. Okay, and price trading up to this swing high, and this candle's open is, if I can get it to show up here, 127.61. Okay, and price trades down from that into optimal trade entry, and this level is the mid-figure level. So we have an optimal trade entry occurring exactly where I taught you they occur at a mid-figure. Okay, in a time when $CAD is bullish, at a time when there's a kill zone. This is the New York kill zone. Okay, and I went in after missing the actual entry in here because the actual entry came in right before the New York kill zone. So I wasn't able to get that price level. So what I'm trying to show you today is, and I've done this in several instances throughout the last 4 weeks or so, I'm actually not trying to give you the precision entries where you've seen me do exercises and drills where I practice and get in there and I get in exactly at the pip. And I'm actually calling the very highs and weekly lows. And you see me do it on a daily basis where I can pull them out and show you where they're at within 1 or 2 pips many times. But I'm usually pretty accurate in terms of where I think it's going to occur. You do not need that to trade with consistency. That's what I'm trying to illustrate here. So there's going to be times where you missed an entry that would be ideal. I missed it because it didn't happen in the kill zone. You can see this candle here comes in at 10:45. Now that's 6:45 a.m. my time in New York. So the next candle, which is what I entered in, okay, is when price is already moving away. But because we have not traded through the reference point that would start the swing, now I'm using the high for this now, not the body. This is when you want to ring in the wicks. From the point at which you draw the fib up to, you want to find the highest high, okay? As long as we're at that level or below it, I would be okay with getting long on it. That's what makes it or breaks it for me. Okay, I asked you guys on Twitter today what would be the absolute latest time you can use for an entry. It's where your first scalping profit taking level is. It's got to be at or below that. Otherwise, it's not. You can't take the trade. Okay, so there's your trade filter. Very simple one. But I'm going to zoom in here on a 5-minute basis. We'll drop out of a 15-minute. Okay, as you can see now here, the chart looks slightly different. Okay, but you can see that the levels I was trying to take my profit out here was exactly at 127.97. I wanted to get out right before the 128 big figure. That actually gave me the exit as it rammed up into the 128 big figure, and then it swept through. Another portion of the market was peeled off at 128.10, and then ultimately, look at the legend maker on the Fibonacci. Now I'm going to remove these labels here because I'm trying to be facetious. And if you watch the Twitter feed, everyone's asking me, like this one here says the showstopper and the legend maker. I did that just to illustrate how retail-minded traders get really excited about these labels and these indicator ideas. Okay, Fibonacci is just a measuring tool I use, and I use it for like targeting. I don't use it so much for entry. I use it to teach where an entry would be an ideal or optimal level, but you don't need the Fibonacci. Now, I do rely on Fibonacci for profit taking. I like to see some things overlap to give me confidence that that's a pretty good level. Because always and upfront, I've been honest with you in regards to what my weakness is as a trader. It's the exits. I'm never really satisfied with my exits, so this has been a way for me to really nail down a specific criteria where it doesn't change all the time. It's just wherever a fib level is, if it lines up with something else I look at from an institutional basis, which I'm not going to teach publicly, then that's where I exit at. Okay. And many times I'm actually exiting before that anyway. So it is what it is. But you can see I got out right before the actual highest high of the day, and Legend Maker Fibonacci was just shy of the actual high of the day. So in that case, it would have been very close to calling the daily high. So it is what it is. I gave you an example of trying to take profits today. I gave you a screenshot of where this demo account was rejecting my price. It wouldn't give me the actual high, and I was trying to do that in here, and it wouldn't let me do it. So I ended up having to get out here. Didn't want to ride back any of this, and ultimately allowed me to take the two final portions off as the price rammed up into the 128.20 level. Now, the actual high on this day comes in at exactly 128.20. Now, for your notes, this is very, very, very important. If you ever see a swing that sets up at a mid figure, anticipate it reaching up to the 27.80 level as an objective. And then if it trades through 127.80, anticipate it rating the 128, or I'm saying those numbers specifically for this pair, but if you're trading or set up long ends up forming around the mid figure 50 level and you're bullish, anticipate it trading up to the next 80 level. And if it trades through 80 with energy, anticipate it running through the next 00 level. Okay. And always, always anticipate some measure of 10 to 20 pips above that big figure. That's what these institutional levels are for. It's nothing psychological about it, because honestly, markets don't move on psychology. Psychology is measured in what price has done and what traders will most likely do. But think about what you most likely wanted to do last week. Did you really execute on it? No. So markets don't move on psychology. Okay. They don't do that. They move on real market orders. Now, sentiment is a derivative of what markets do, but sentiment and opinions, if you will, they are not the hallmarks to consistency. I don't use anything about my trading that's retail based. Okay, the only thing that's resembles retail is if I have a Fibonacci on the chart. Right away they'll think it's Elliott wave or it's something to that effect, and it's not. I use fibs for targeting, and the entry for optimal trade entry is just for you to see what I'm seeing in the general area. But believe me, there's something entirely different except for just that Fibonacci level. Okay, 62 to 79% trace level is not the magic I'm looking at. Okay, the mentorship knows what I'm looking for, but for now, for public perspective, this is enough to suffice and accomplish the means that's necessary for me to teach it to you. Okay, you can keep a fib on your chart the rest of your career and never want to get rid of it, and there's nothing wrong with it. Okay, if you need that crutch to get into the trade, there's absolutely zero shame in having that. It is what it is. Don't worry about it. But that's what I was using today, and you can see pretty much it has a real nice reaction off of that. See, price had a real nice response back off that 128 big figure, and now we've broken down again. Okay, so hopefully you found this example insightful, and until next time, I wish you good luck and good trading.